let's get this doggy moving. Roll high, get him in, move him on, round him up. All right. Damn it, that didn't work out right. All right, start that. Next, it's not made for children, go live. Video camera, go live. What do we have here? And here we want that. All right, I think we have it. Start streaming. There we go. That works. That works. Get rid of that. All right, let's do this right there. That right there. Excellent, excellent. Working. Yes, we are ready to roll. Good evening, everyone. Hold on. Not quite ready yet. Hey, Len, how are ya? I see ya. And there we go. Reverse this camera. There we go. Go all the way to the back. See who's here tonight. Who's here? Say hey. Say hey, hi, hello. Teacher Gregory. What's happening, Teacher Gregory? Dan, my tribe. Seychet. Riley, good evening, sir. Len was on vacation. Nice to see you back again, Mr. Len. Riley wants to take a look at Hormel. Gotta love Hormel. Dude, I learned so much from you last time. Thanks. Well, thank you, kind sir. Ask your questions. Whatever you got, let me know. Kimberly, hello. Rams Clips, thoughts on Bitcoin. Here's my thoughts on Bitcoin. Number one, there is some space for Bitcoin. Now, I don't trade Bitcoin, so I really can't tell you what to do with Bitcoin or where it's going or give you any advice whatsoever. But is it here to stay? Is it a fad? I don't know. That I couldn't tell you. Okay, you're going to keep buying it, you're going to keep selling it, one way or the other. J.S. Creel, how are you today? Who do we have over here? Over here we have Jared Sarton, Fredo, Teacher Gregory, okay. Fufa Finnerson, okay. Chad, Sherry, Uncle Lily, Ink That Apparel, okay. Where was that? Ink That Apparel, Phil, Percival, Eugene, Solomon, Jose Sanchez, Matthew Harris, Chico, Kelby, thank you for that, Kelby. Good Movers, okay, Jake Weimer, Jimmy, what's happening, Jimmy? Cotton, what's happening, HL, okay. Hela Mining, we'll take a look at that in a little bit, sit tight. Do you have YouTube? Yes, there's 3 YouTube channels. Wait a minute. 1, 2, 3. Yeah, 3 YouTube channels. Cotton, thank you for that. Sunny Chill Days. African King. All right, my tribe. Bama, what's happening? Paul, good evening. Derek, my own boss. Nicely done there, sir. CC5, Kelby, thank you. Billy, Kalar. What is Kalar, Billy? Ken Ray, thank you. Duggo's in the house. Oscar's house is here. Hey, yo, it's Alex. All right. Weekly ETFs. I started trying on Robinhood. All right, Lee Seidel. Let me know which ETFs you're looking at. How was your CEG options? Sit tight. We'll take a look at that in a second. All right. CEG will be on the list tonight. All right. Now, that's saying hi to everybody so far. Good evening. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Now, my goal is 1% every week. Follow along if you like. Ask whatever questions you like, but always keep in mind where I'm coming from. You like those, Alex? Always keep in mind where I'm coming from. Remember, I'm 62, I'm retired, so my investing is different than what your investing might be. Mine, for me, simple, safe, predictable, consistent 1% per week. Can you let me know what you think of PL? We'll get to that in a little bit. Just sit tight. Andrew, we do overcomplicate things, James, don't we? Andrew, yes, we do. Thank you for that, Mr. Jake. Andrew. Bourbon Baron, SVOL. We'll take a look at that in a minute. Sit tight. All right, so we got a couple to take a look at. Lee Seidel, you're going to tell me some of those weekly ETFs that you like. Take a gander at those. Billy Kayla, we'll take a look at that one. First on the list, let's find something good. So, tell me something good. Tell me that you like it. Okay, first, Bitcoin. No to Bitcoin. Okay, Riley was the first one to ask, and he wants to take a look at Hormel. Now, if you didn't know, Hormel, HRL, Hormel has been in business for over 100 years. Okay? Now, they are also what is considered as a dividend king. Now, a dividend king has, you ready for this? 10, 20, 30, 40, 50. That's 5 decades of consistent increasing prices. That means for 5 decades, that's a half a century, this company has been more profitable every single year. So every year, for 5 decades, higher profits. That's what it takes to be a dividend king. 5 decades or more of increased profits. I love those. I don't think Zoom is working. Hold on. Yeah, there's nobody over there. So let's try that Zoom one more time. All right, Zoom. In progress. Copy invitation. Let's go back and send it out again. Okay, that was sent. This is sent. Invitation sent. Okay, let's send it out again, just be on the safe side. Sit tight. Uh-oh. I did send it out a little while ago. I don't know why it didn't get sent. All right, almost there, almost there, almost there. Come on, come on, come on. There it is right there. Let's take a look at Yahoo Finance. Yahoo Finance, there it is. All right, Yahoo Finance, there we go. Get that, get rid of that. Slide down. All right. I think it might be working now. All right, there we go. Let's get back to where we were. There we go. All right. Hormel. Ignore that. All right, we're going to take a look at Hormel. Here we go. Now, anytime I look at anything, I always want to look at the 1-year chart first. That's the last 52 weeks. Now, I'm looking for 5 things, and it takes me anywhere from 3 to 4 seconds. You ready? Follow along if you would. You ready? Remember that? And, I don't know, 1st grade, 2nd grade, 3rd grade, a long time ago. Follow the bouncing ball. Bang, 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 bang. Okay, anyway, 5 things. You ready? The high of the year. the low of the year. Where was it a year ago? Where is it now? And then number 5, are you ready? Up, down, up, down, up. Okay, so it's actually going up at the moment. Now, I do everything step by step. It's kind of like paint by numbers. Remember that? 1 red, 2 green, 3 yellow, blah, blah, blah. So 1, 2, 3, A, B, C. It's always the same thing. I look at the 1-year chart first. After the 1-year chart, I want to take a look at the numbers. Because rule number 5, which we'll get to all the rules in a minute, but rule number 5 is make sure all the numbers work. So what are we looking for? Thank you there, Andrew. All right. Do the numbers work? Number 1, what am I buying it for? $24.99. $24.99. $24.99. $24.99. It's up there 4 times. That's the last traded price on Friday. $24.99. So if I'm buying at $24.99, I want to sell the 25s, and I'm going to pick up 60 cents. That's more than 2%. Now, I'm looking for 1% every week. But if the market maker is going to give me more than 2%, why not? I mean, think about it. If 1% every single week is over 50% per year, really, 2%'s got to be 100% a year or more. Well, let's find out. Now, once we look at the numbers, we're going to take a deeper dive into the chart. Is the chart telling me it's the right time to buy, or should I wait a little longer? Because stocks do 2 things and only 2 things. They go up and then they go down. They go up and then they go down. Funny thing is, they go up until they're done going up. And then they turn around and go down. And then they go down until they're done going down. Then that's all they do. They go up, down, 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 up, down. That's all they do. They go up, they go down, that's it. Our idea is to jump in at the right time as she's getting ready to go up. Grab your profits, get the hell out, move on to the next stock, because they're all going to do. Now, you're going to jump into a stock and it's going to move up and you're going to say, ooh, I'm going to ride this baby to the moon. It doesn't work that way. It goes up a certain percentage, and then people like me start taking profits. It's like, I'll take those profits. Why the hell not? Anyway, let's keep on going. All right, so I want to zoom in, take a look at the last 3 months, the last 90 days. High, low, where was it, where is it? Up, down, up. Easy to see. I mean, you really can't mistake that for anything else. Up, down, up. So it's in an upward trend right at this moment. But does it make sense for us to jump into this first thing tomorrow morning? Well, let's keep on keeping on. The last 30 days. So today's the 22nd, so we want to look at the 23rd of last month up until today. And there it is right there. This is the last 30 days. Now, the last 30 days, it's not rocket scientist, it's not exact, it's not guaranteed, but it does give us an idea of where do we think it's going next. Well, she went up, down, now she's going up. Now the high is right up here, so we have this much room to go. Can we do it? So let's find out what the numbers look like. So if I'm going to do this one at 25, let's figure this out. Let's get rid of that. Let's change this right here to one of the safest trading strategies right there called the covered call. Remember we said we're going to do the 25 right there. There it is. 25 is right there. Here's the order. Now I want to change it because I don't want to do 10. I want to do just 1 so you guys get a better idea what 1 looks like. Whoops. All right, here's the order itself. Now, I always encourage people to read it out loud because your eyes and your fingers can play tricks on you, so your ears. So use as many senses as you can. Buy one covered call Hormel, 27 February. That's this coming Friday. Tomorrow's Monday. This is a 5-day trade. Okay. So, $25 call option. Remember, I'm buying it at $24.99. Now, keep in mind, all these numbers are going to change tomorrow morning. As soon as the market opens, all the numbers are going to change. But the mathematical equation stays the same. What am I buying it for? What am I selling against it? What am I collecting? Is that more than 1%? Either it is or it isn't. Is the stock moving up or is it coming down? Now, it's always important to know, or at least get a comfortable feeling of where you think it's going to go. And then you got to ask that nagging question. Does it make sense? Well, the second question might come to your head is, do I like this company? Now remember, we're all looking to do the same thing. We're all looking to put our money someplace safe that we think is going to grow our money. But I'm coming from a certain point of view where some of you may agree and some of you may not agree. I'm looking for cash flow. I'm not looking for capital appreciation, because we have two different types of companies in the stock market. And you know what? It's Sunday, which means we're going to go check and see how many new stocks they've added last week, because every Sunday we check it out. Matter of fact, let's do it right now. Before we even finish this, let's go check out how many companies are available this week. So for that, we're going over to FinViz. And FinViz is the website that we go take a look at to make sure how many companies there are. I go to the same place all the time. All right, so I'm going to check out the screener after I get rid of that thing. All right. And there's the number right there. I look every week. It's the same spot every single week. You ready? Right there. 10,924. Now, wasn't there 10,934 last week? Anyway, 10,924 companies this week. That's a lot. So how do you decide which ones you pick? Okay, let's take a look. You ready? Here's the order again. One covered call Hormel, 27 February, the $25 call option. Here's my profit, 71 bucks. Well, what is this trade costing me? Well, the cost of the trade, including commissions and fees, is $24.29. Well, it's only 2,400 bucks for one contract, but what's the rate of return? How much am I walking away with? Well, let's find out. For that, we need the calculator. We take the profit, 71 bucks, divide it by the initial investment. Because to find the rate of return, you got to take your profit and divide it by how much you have riding on it. So I got riding on this one, 24.29, and that gives me a total return of 2.9% for 1 week. Think about it. I'm looking to get 1%. This here is offering 2.9. Well, 2.9 is not bad if you think about it. But do you like the company? It's always a big question. Now, I am going to write that one down because I like 2.9. And it is going the right way. HRL 2.9. Now we're going to save this one. All right. It's been like 4 days. It's like, do I even remember what I'm doing? All right, here we go. Starting a new week, so what do we have? We have nothing. Nothing's on the board. Here we go. Hormel, right there. HRL. think they're supposed to do that. Okay. Try it again. HRL, 27 February. That's this coming Friday. The $25 call option, 71's the profit, 2,400's the investment for a 2.9% for 1 week if you like Hormel. Now, Hormel's a 100-year-old company, 100 years, and over 5 decades of increased profits. So you need to ask yourself the question, do I like Hormel? Either you do or you don't. $2.9. Gotta love it. What do we have next? What's next? What's next? What's this? What's this? There's something in the air. All right. Bourbon Baron wants to take a look at SVOL. Now, just to let you know, I've never heard of that company, so let's see what it looks like. Let's go. Here we go. SVOL. SVOL. And it is Simplify Volatility Premium ETF. Why do I have a bad feeling about this? No. Sorry. I don't do monthlies. Okay, March, April, June, September. Those are months of the year. No, no, no. See, now that's my own fault because I didn't tell you what the rules were. Rule 1, make sure you know what you're buying. Never buy something you don't understand. Rule 2, never sell at a loss. Rule 3, make sure the company is consistently profitable. Rule 4, here you go, this is for you. Rule 4, weekly options only. I don't do monthlies, they just don't work out. Too much aggravation, and they just don't pay enough. Sorry. And rule 5, make sure all the numbers work. What am I buying? What am I selling? What am I collecting? What's the percentage? Blah, blah, yada, yada, yada. As things progress, you will see everything work out. Like a good movie, everything will make sense before we are done. All right, so no to SVOL. What else do we have? Stoyan Dmitriev. Kagdala. Is Cola a good stock? Coca-Cola. Coca-Cola is a great stock. However, I don't buy anything at the high. So that's going to be a no right from the beginning. Sorry. Chrysler. Do you still enter in a stock if it's already 30-day high, but you're expecting EX date announcement? Nope. That's it. No. I don't buy at the high. I don't care what the reasons are. It just doesn't make sense to me. Just, see, here's the thing. It goes up, it goes down, it goes up, it goes down, it goes up, it goes down, it goes up. What do you think it's going to do next? Eventually, it's going to come back down again. I don't buy anything at the high because you just don't know when it's going to come down. It will eventually. And I don't want to be buying Coca-Cola. What is that? 80 bucks? Yeah, no, thank you. All right, next. That guy. Rabbit hole. Yep. Sorry about that, dude. They go OTC2. Okay. Thank you. Coltrane, how are you? Tishelle Blakeney. CZR. Thank you for that, Tishelle. Let's see. CZR. Never heard of it. CZR. Caesars Entertainment. Interesting. Definitely interesting. Let's check it out. Here's the high of the year. Here's the low of the year. Here's where we were. Here's where we are. Now look at this. Down, up, down, up, down, up. Well, what happened on Friday? Let's zoom into that a little closer because there might be a possibility. There we go. 30 days ago. Are you ready? 30 days ago, here's our top. Right there. We drop. Here's the bottom. She gaps up once. What happened on Friday? I don't know. Do we like this company? Now, for the fun of it, considering I never heard of it, let's go take a look at Yahoo Finance and see how often has this company here increased its profits. Because I don't want to buy a company that's not consistently profitable. It just doesn't make sense to me. So, Yahoo Finance, what are we looking at? CZR. CZR. Never heard of it. Well, let's check it out. Here it is right here. Caesars Entertainment, CZR. Okay. Now, we're going to stop right there. Okay. Chichelle says right here, forward dividend and yield and EX date. This thing has no dividends at all. Now, Chichelle, I appreciate the comments and I appreciate the interaction. But the name of the show is Dividend Stock Talk. The word dividend should give you some kind of clue that we're only looking for dividend stocks. This is not one of them. Now, while we're here, let's take a look. Oh, OXY is Occidental Petroleum. That one I do know is on the list. But CZR, no. Sorry, kiddo. So, OXY, Occidental Petroleum. Gotta like that one. And that one, no. The reason why it's a no, she gapped up and she's at the high of the year. Well, what usually happens with a gap up? Well, the gap that big, there's usually going to be profit taken. It's usually going to drop if that's helpful information for someone. But to Shell, sorry, I don't buy at the high ever. Sorry. What else do we have down here? Calm, thank you for that. Consistency equals 20 to 25 years. Thank you. Dividends, baby. Absolutely there, Mr. Kenny. Bourbon Baron. American Airlines, really? AAL. Here we go. You ready? High, low, was, is. Look at this. Down, up, down, up, down. It's actually coming down at the moment. But the nice thing about it coming down, take a look right here. You ready? Let's go to the high of the year. Look what it looks like. Okay, the high of the year, it came down. I like calling that profit taken because it's not a profit until you take it. And when everybody takes profits at once, the stock drops. Gets to a bottom, turns around, goes back up again. Now she's coming back down. We're sitting right here. Now Thursday is the new bottom and Friday is one day to the upside. So here's the thing. I love it when you have a 30-day top. Now she's going back up again. So yeah, I'm going to put American Airlines on the list for tomorrow. And let's see what number American Airlines gives us. So this might be number 2 for the day. We are at 1350. There it is right there. Here we go. You ready? Buy one covered call, American Airlines. 27 February, 1350. $40 is the profit. 1,300 is the investment. So calculator, come out wherever you are. Why is that not open? Here we go. All right. Calculator. $40 is the profit. Now, I know it doesn't sound like a lot of money, but don't think about the cost. Don't think about the profit. Think about the rate of return and whether or not you like the company. You either like American Airlines or you don't. It's a very simple equation. All right, so $40 is the profit. Well, what's the investment? The investment is $1,310, $1,310. Now that's per contract. Now, one contract is 100 shares, and one contract is the ability to sell one covered call against this position. So the rate of return here is 3%. Yeah, I'm writing that baby down. Okay, so we're going to save that one because I like 3%. And I like American Airlines. Let's do this. come out, wherever you are. Come on, there it is. American Airlines, 27 February. That's this coming Friday, 5 days away. $13.57. The current price is $13.44. Okay, well, here's my profit. Here's my investment. The profit, think about it. What is the rate of return? The rate of return is 3% if you like American Airlines. All right, well, let's find out. Well, that's not bad. Take a look. 2.9, then 3. Gotta love it. Gotta love it, love it, love it. All right. So let's get rid of this one. That's 2. We got 3 more to come up with. What do we have next? Let's get rid of that. Let's get back to right there. What else do we got? Kenny, buy undervalued stocks with good revenue. All right, Kenny, body water. You gotta tell me what the ticker symbol is, because there's over 10,000 different companies. I don't know all of them. All right, let's see what else we got. Nothing over here, nothing there, nothing there. Okay, we got some stuff right here. Gen Xer wants to take a look at Dell. I like Dell, I do. Cotton wants to take a look at HL. Cotton, what do we got? HL. Hela Mining. Ooh, this looks interesting. Now, I seriously don't think this thing has all the dividends you want to have. However, we're at $5 last year. She shot up to 35, pulled back. Look at this right there. Look at the last 30 days. 30-day high. She drops, goes sideways. Now look at this right there. Last Tuesday was the bottom. Then we got our 2 days to the upside. She's definitely coming up at 24. Look at 24, 107. That's 4%. I seriously doubt this thing has dividends. Let's take a look at it anyway. Kenny, what? That's the ticker symbol. What? Body water is WHAT. I find that hard to believe, Kenny. But we'll take a look at it. What? What are you looking at? What? Yeah. What are you looking at? What? That's kind of like who's on first. Who's on first? Yeah. I don't know. Third base. All right, anyway. So, $24. Let's check it out. HL. All right, 24, 24, 24. There it is right there. Let's do just one. And let's check it out. All right, Kenny, we'll check it out. Hold on. Sit tight. Here we go. HL, 27 February. It's this Friday. The 24 call option. $45 is the profit. $2,300 is the investment. Let's check it out on the calculator. Profit, $45. Investment, $2,355. Comes to a total of 1.9. 1.9. That's not bad if you think about it. Well, 1.9. All right, let's save it. This will be number 3 for the day. Number 3. Holy cow, we're more than halfway done already, and we're not even into the first hour. Did I even save it? I did, right there. There it is. HL, 27 February. The 24 call option, look at this, $24.72 is the current price. 45 is the profit, $2,300 is the investment, 1.9%. Why the hell not, right? 1.9. That's 3. We got room for 2 more. What do we got? What do we got? Nice call there, Cotton Express. Hold on. All right, Kenny wants to take a look at what? I don't know, Kenny, what do you want to take a look at? What? Yeah, that's what I said. What do you want to look at? Yeah. We can do this game all day. What? WHAT, here we go. All right, now, it says we cannot find this ticker symbol. Sorry, Gary. What is not a ticker symbol here for the U.S. for anything? All righty. All right, next. All right, we did HL. Bama, how are you doing? Paul, good evening. Derek, how's it going? My own boss. CC5, what's happening? Billy, Kayla. Funny thing is, I had a kid in school I went to school with, Billy Kolar. This is Billy Kaylar. All right, Kaylar, here we go. No. Sorry, Billy, I don't do monthlies. Rule number 4, weekly options only. Sorry, Billy. Ken Ray. Duggo, Oscar's house, how's it going? Jen Xer wants to take a look at Dell. I like Dell. I even have some Dell. Let's take a look at the numbers. The high, the low, where was it? Where is it? Look at it. Down, up. What's going on? 122.27. The 122 is going 635. Holy cow. I love Dell. I actually have some. So let's take a look. Now, a year ago, Dell is sitting at 114. Finds the bottom in April at 64. Tops out the end of October at 167. Well, look where we are now. The last 30 days. What do you think? The high, the low, where was it? Where is it? Look at this. Up, down, up. Not quite to the top. We still have all that room right there. That's plenty of room to run. So let's take a look. Dell, 122. Why not? I love Dell. All right, let's get rid of this. Dell at 122. One contract, because we all know 1 is the loneliest number that you'll ever do. Okay, Dell by 1 covered call, 27 February, 122 call option. The stock's at 122.27. I'm going to walk away with 662 for 1 contract. Well, 1 contract's 11,000. Well, what's the math? Let's figure it out. It's not that difficult. Take the profit, 662. You divide it by the investment. Now, this is a little bit more than the other ones we were looking at because it's a $120 stock. Okay. Well, the investment is going to be $11,538. Well, what's the rate of return for 1 week? Remember, I'm doing weekly. 5.7. 5.7 for 1 week. If you like Dell. If you don't like Dell, don't buy it. It is so simple, it's mind-boggling. Rule 1 is easy. If you don't understand the stock, if you don't know who they are, what they do, how long they've been in business, do they have dividends, do they have options, are they profitable, are they not, you shouldn't buy it. It's actually that simple. 10,934 stocks. Pick one you know you understand and you're okay with putting your money into. Remember, out of everything and anything, you are ultimately responsible for whatever you do. Okay, some people like to blame it to others. Don't be blaming me. Don't be pointing fingers in my direction. I'm just pulling up the numbers and taking a look and giving you my opinion, and that's all it is. I don't give tips. I don't give what do you call that? Whatever. 5.7. Yeah, I'm going to save this one. 5.7. That brings us up to number 4, which means we got 1 more to go. Wowza, wowza, wowza. Wowsy, wowsy, woo. I forget who said that. Who said that? Wowsy, wowsy, woo, woo. 5.7 for Dell? You gotta be kidding me. By one covered call, Dell. 27 February, that's this coming Friday. Remember, I do weekly options. I buy a good company. I like Dell. I sell some of the rights to buy it from me for basically the exact same price I paid for it. So the stock doesn't even have to move and I'm still getting my profit. Because if I'm buying it at 120 and I'm selling it at 122, whoa. Wait a second, let's back this up for a second. Back it up for 1 second. Back it up a little bit more. Okay, the price is right, well, hold on. Come on. There we go. Give it a second. There it is right there. Okay, the current price, 122. All right, I'm fine. 122. Didn't look right there for a second. I had to double check. Oh, we've already did this. We already got this right here. Yeah, there it is right there. The 122, 622 is the profit, 11,538 is the investment. So you ask yourself the question, do I like this company? Am I willing to hold on? Hey, social. Ooh, thank you for that. That was cool. All right. What did we say this one was? 5.7. Okay, 5.7. That's the best one so far. 5.7. What else do we got? Okay, no more questions there. No questions. Wow, I get almost all these questions done. We're only at 10 o'clock. We only got to find one more. I only want to do 5. 5 a day. We got 4 pretty good ones too. All right. What questions? Ooh, I missed some questions here. All right. Wow. Holy cow, I missed all these questions. All right, let's grab a seat so we can take some of these questions. Simone, I see Simone is in the house. All right, let's get comfortable here and see what we got. All right, there's Kaylar. We did that. St. Martin, I don't think Zoom is working. What do we have over here? I sent the invites out twice. Okay? So I don't know what's happening with Zoom. So let's do this. Let's exit that one. End meeting. Let's try one more. Let's get out of there. All right, February 20. What's today? Today's Sunday. Huh. Wait a second. That's February 18th. Let's go to home. Home. Come on. Schedule. Hold on. I'm taking the Zoom class. February 22nd. 10 p.m. What? Okay. There it is right there. 9 p.m. Start meeting. Okay, and let's start it again. Let's see if that works. So we're trying to start it again, see if it works. All right, sorry about that. What other questions do we have? Pike 212, how's it going? You're new here, Pike. Thank you for that. Topher, I like the stained glass door on the shed. You like that? Who the hell puts stained glass double entry doors on a shed? Topher, the only reason I did that was I got a great price on it, number one. And we're actually going to convert that shed to a, what do you call it, a tiny house. And we'll put a second floor on it because the county said we can't build any more houses on the property. But the shed falls within the, what do you call it? The setbacks and all the right, what do you call it? I came in late. What stock is that? Sorry about that one for you too, to fair. All right. But anyway, we are going to put a second floor on, so stay tuned. Hopefully, sometime in the spring it will be done. All right. Okay, Lane. Thank you there, Mr. Lane. Books. Brian Marlett, good evening. Papa HD, what's going on? Tom Hart, how are you? Kelby. Yep, we already looked at Hormel earlier. Joe, how you doing? Sam, how are you? Carla, Phil, Bella. Okay, XYZ Steve, FinViz, FINV. What is that? Oh, there you go. V, VIZ, FinViz, Financial Visualizations. Social Lily, good evening. Phil, how are you doing today? Simone, how are you? MC, Hela Pilot, back again, I see. HVAC Wizard, back again, I see. Gary Bezel, how are you? Satpal Penu. Brian, ULTY. Now, Brian, I feel a little bit bad for you, but I'm going to do it anyway. We're going to take a look at ULTY. And you're going to think to yourself, why the hell did I put my money into ULTY? You will, Brian. Okay, there it is right there. ULTY, yield max. Now, what I want to do, Brian, so, just in case you didn't know, I want to look at historical data. Let me go over to this side. Now, this is Yahoo Finance. It's free to use. You really should have a financial website that you can take a look at stuff. We want to take a look at historical data, Brian, because I want to see, I got two choices here, Brian. I can take a look at 20 years of annual statements or quarterly reports, or I can go right to the dividends and find out whether or not this company's been profitable or not. Because, Brian, here's the thing. A dividend is the portion of the company's profits that they give back to the investors. Okay? So, I want to look at historical prices, but not just the prices. I want to take a look at the dividends. Because here's the thing about dividends, Brian. If the company makes more money, the dividends go higher. If the company makes less money, the dividends go down. So I want to look at companies that are consistently profitable. And you know what? We're going to take a look at this, and then we're going to take a look at one that actually fits, because ULTY doesn't fit. It's just a no, but I want to show you why it's a no. Okay, now I want to take a look at the dividends only. Okay, now I want to take a look at all of the dividends. 2 decades, that's 10, 20 years. Have they consistently increased their profits for 2 decades? Well, let's find out. Now, I got a minor problem with this one, Brian. Okay? The very first dividend that ULTY paid was March 4th, 2024. Now, I don't know how you guys count where you came from, but where I came from, that's only 2 years. I said 2 decades. Now, 2 decades is 10, 20 years. 20 years of consistent profits. And ULTY only has 2. 2, Brian, 2. No. I want 20. But anyway, let's take a look for the fun of it. 10.65 is the very first dividend. Okay. 14 is the second. Well, that's more money, right? 12. So it went from 10 to 14 to 12. So it went higher, then lower, and then lower, and then lower, and then lower. Do you see the pattern here? It's not going up, it's going down. Okay, hold on. It gets worse. Okay, so higher, lower, 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 higher, lower, higher, lower, 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 lower. Hell no. Brian, seriously, what the hell were you thinking when you put your money into a company that's consistently going down? Now, you got to understand, the dividend is a portion of the company's profits that they give back to us. So if they're running the company properly, the dividends or the profits should get higher and higher. This, it's 2 years old and it's not consistently profitable. Let me show you what consistency profitability actually looks like so you get a better understanding of it. Now this company has 25 years of increased profits. Let's go all the way back to 2006. That's 20 years. Are you ready, Brian? Check this out. Okay. 2006, 20 years ago. 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46. 51, 56, 62, 68. Do you notice each time getting higher? Hold on, not done yet. 68, 75, 83, 91. Now, Brian, did you notice 2 decades? That's 20 years every single year. That number got higher and higher and higher. There was no going backwards. Now, in order to consistently increase your profits, that would be considered, I don't know, profitable, consistency of profitability. That's what I like. Uh-oh, got a question down here. Okay. B. Rick, what do you think of Intuit and their stock? Been heading down across the industry, tech, but is there something more into it? Isn't that INTU? I'm curious, INTU. Hold on, let's get back to the beginning and let's take a look at INTU. INTU. Intuit, I was right. Okay. So, is it consistently going down? Take a look at the numbers. Numbers don't lie. Here we go. You ready? Here's the top, 800. Here's the bottom, 80. That is a 50% drop. Remember what I said, rule number 1? Never buy something you do not want to hold on to. You either like it or you don't. Price, whether it's going up or down, should be irrelevant. Are they consistently profitable? Do you like the company? Well, let's take a look at the profits for Intuit. Let's get rid of that. INTU. Let's take a look. Are they profitable? All the way back to 2006. It doesn't go to 2006. It only goes to 2011. So it's not quite 20 years. So was it 16 years? Okay, it's 16 years. Well, let's see. Are they consistently profitable for the last 16 years? What's going on? Now, I don't really pay much attention to the price. My main concern is, are they consistently profitable? Because stock price is nothing more than our perception of the value of the company. It's got nothing to do with the company itself. Is the company making more money? Are they being run well? What's the revenue per share? Is it increasing? Is it decreasing? Stock price, it's just what we think. Not actually what the actual value of the company is. But let's check the dividends. Are they increasing or are they decreasing? 15, 17, 19, 25, 30, 34, 39, 47, 53, 59, 68, 78, 90, 104, 120. Well, the company's consistently profitable. That's a good part if you like the company. And that's kind of important. Okay, so Beer in a Foxhole says that price is everything. No, price is not. Price has very little to do with the value of the actual company. Let me show you some statistics, and then you tell me what you think. All right? So, we want to go to statistics. Are you ready? Now, this is Intuit. Numbers you should be paying attention to. Okay, market cap. 170, 168, 175, 219, 185, 190. Okay, so it's kind of like not really going anywhere. All right, fine. Let's go down to here. Revenue per share. Now, this is important. Are you ready? The stock price, $3.79. Revenue per share, that's how much money is coming in as opposed to how many shares they have outstanding. Think about it. Okay? $3.79. For each share that they have revenue per share $69. And what is the revenue growth year over year? 41%. That's nice. Hold on, I'm not done here yet. Quarterly earnings growth. Now this number is important. Okay? Where was it? Quarterly earnings revenue is 41%. Here it is. Quarterly earnings growth year over year. That means every quarter, are they making more money or are they making less money? Well, look. Quarterly earnings growth year over year, negative 14%. That means they're making less money. The revenue per share, not that good. Okay, let's go down a little bit further. Okay. Book value per share. That means if the company's going to liquidate everything that they own, the book value of the company is $69 per share. So when you say price is everything, no, it ain't. The value of the company is in the earnings and the assets. The assets, something you can turn around and sell. Stock, you can't sell stock prices. It's just perspective. As you think it's worth that. It's not. It's worth $69.38. If the Supreme Court came in and said, hey, you got to sell off everything and pay off all your investors, guess what you're getting for your $379? They don't care what you pay for it. That's your fault. It's only worth $69.38. And how much money do they have coming in? Well, per share, revenue per share is only $69. Okay? And the earnings growth is negative 14. So no, it's not worth it because it's actually making less money this quarter than they did last year, same time. It's the numbers. It's nothing to do with the stock price. You got to forget that. Okay, here's an idea. Are you ready? That's one. Let's find another one. You ready for this? Let's take a look at numbers for Nvidia. Okay, now Nvidia is $189 per share. Well, let's take a look at the revenue. Well, their revenue is $7.67 a share. $7.67. $7. That's what the revenue is. Look at the book value. The book value, $4.89. Yeah, no. One more. You might like this one better. General Motors. We know who they are. Well, let's take a gander. The stock price, $81. Okay? Stock price, 81. Look at the revenue. Revenue per share, 193. Stock price, 81. Revenue, 193. They're bringing in more money than they do have shares. Hold on. Let's look at the price. Okay? The book value is 67.61. So in assets, General Motors is worth more than those other two companies combined. But their stock price is a lot less. And I didn't check out what was the dividends for that other company. I know the dividend for Nvidia is 1 penny. Yeah, no thank you. So I hate to be the bearer of bad news, but stock price is not everything. A stock price is just the public's perception of the value of the company. The actual value of the company comes in through the numbers. What are they bringing in consistently? Are they consistently profitable? If they had to liquidate, what is their asset value? You ask the I was going to say bookkeeper, the CPA, what is the value of this company? They don't look at the stock price. They look at the hard assets. What can they sell? You can't sell the value of a stock. You can only sell the value of the company. Anyway, I'm not going to keep going into that. It is what it is. You believe what you want. Nothing wrong with it whatsoever. Something more to it. All right. Yeah. Last week you said you were going to take a look at Bristol Myers Squibb and Intel. Ooh, that's right. Let's take a look. Bristol Myers and Intel. BMY. No. Okay. Now, last week, Bristol Myers Squibb was here. No. We bought Bristol Myers Squibb like 2 or 3 weeks ago. I actually bought some Bristol Myers Squibb. So it wasn't last week, it was the week before. Down here. Not up here. Because she went up, now she's coming back down again. Okay. No. Okay, Intel, INTC. Intel was a couple of weeks ago also, because I jumped into that one also. Okay, look at Intel. Shot up, pulled back, went back up, now she's coming down. Now Intel, maybe another week or two, because she is dropping, looking for a new bottom, and when she finds a new bottom, it might be a good idea. He's rage baiting. Just for fun, please take a look at CMP. What the heck is CMP? Compumedics. Hell no. Sorry, weekly options only. And OEC. Orion SA. I don't do monthlies. What do you think about MSTR? MSTR. Interesting, but I got a funny feeling about MSTR. MSTR. Let's take a look. Historical data. Okay, dividends only. All the dividends. Now, see, here's what I don't like about MSTR. You ready? There are no dividends, which means they don't share their profits. And if they don't share their profits, how do we know when they're going to move? What do you mean when you say you don't do monthlies? Sorry, I'm new. Whew. All right. Newbie alert. Nothing wrong with being a newbie. Don't worry about it. Can you please give us 5 stocks you like? We just found 4. We got to find one more, so sit tight. Okay, we're at 10:19. We got another 45 minutes. I'm sure we'll find another one. Sit tight. So what do I mean by I don't do monthlies? Okay. Now, don't feel bad. Everybody asks this question a while. Yes, I do. I like Pepsi. Here we go. You ready? When I say I don't do monthlies, are you ready? Check this out. 27 February. That's this Friday. March 6th. That's next Friday. 13 March. That's 2 Fridays away. 20 March. 3 Fridays away. 27 March. 4 Fridays away. 5 Fridays away. 6 Fridays away. Do you notice the pattern here? Every single Friday there's an option getting ready to expire. That is a weekly option. Now, one monthly option. Whoops. You ready? March, April, June, September, December, January. Those are months. Those are monthly options. Once a month, that's it. I don't do monthlies, the numbers don't work, and it's very challenging. Hold on. 30 days ago, down, up, down, up, down, up. That's 30 days. Okay? Currently, we're at 66.14. Tell me where it's going to be in 30 days. 5 days is hard enough. To me, 5 days looks like she should be about here. Okay? Because here's the top. She went down a little bit up. She'll probably come back down again. She'll probably be here in 5 days. 30 days, I have no clue. I don't do monthlies. It's not that easy to figure out where they're going to be. And take a look at what we're getting. Right now it's at 66. The 65s are going for 185. But if I buy it for 66.14 and I sell it for 65, I'm losing $1.14. Take $1.14 off of this. Now I'm walking away with 71 cents. That's like a little over 1% for a month. I don't do monthlies because 1 to 2% a month only comes to 12 to 24% at the end of the year. I prefer to do weeklies and get 50% to 100% by the end of the year. I just don't do monthlies because they just don't pay the same, and trying to figure out where stock's going to be in 30 days is not that easy. So no. You in there. Thank you there, Mr. Michael. Do you have a Discord I can join? Yeah, but it's a paid Discord. I'm not sure what you'll like that idea. And I try not to sell anything while I'm here. Weekly options expiration gets you the 52%. Cool. Thank you there. Yeah, usually. All right. Let's keep on keeping on. What else do we have here? So sorry, Brian, ULTY is going to be a no because they're just not consistently profitable enough. In 2 years, for me, is not enough time. Okay, there's over 10,934 companies. Why would I pick ULTY? It's only 2 years old. Now, for you, it might be great, but I'm 62. I'm not putting my future in the hands of a company that's only 2 years old. Sorry, there's way too many companies that's over 50 years old, 60 years old, 100 years old. They've been there, they've done that, and they've seen this, and they've seen that. Yeah, I don't do young companies. Sorry, it's kind of like I don't date people under the age of 18. I don't buy companies under the age of 2. Sorry. Cotton, we already looked at that in ULTY. Oh, Social Lily wants to take a look at Lockheed Martin. LMT. For you and for me. I'm going to say thank you for your input, Social Lily, but I don't buy anything at the high. It's at the high of the year. No. Cotton, we looked at that. Brian, we looked at that. Social, we've seen that one. Oh, NBIS. Okay. NBIS. Nebius? Okay. Now, Nebius, I'm going to say no to only because it ran out of steam. Hold on. Let me show you. You ready? high of the year, low of the year. Here's where it was, here's where it is. Look at it. Down, up, down, up, down, up. Okay, but look at what's happening right there. Let me zoom in and you'll see it a little easier. Okay? 30 days ago, we're here. We drop, we find the 30-day bottom. Now we shoot up. Yeah, it's at a 30-day high, and it's starting to come down. Stocks do two things. They go up until they're done, which apparently is here, and then they come down. Now, before you jump to conclusion, count the numbers. Are you ready? The 30-day bottom is here, 74. 30-day top is here, 106. So 74 to 106 is $29. That is a $29 increase on a $75 stock. That's over 30%. Count it up. Count it up. Okay? 24 to 104, 106. It's over $30. That's a $30. Yeah. Profit taken. Baby's going to come back down now. Now, NBIS, we can put that down for 2 weeks from today. Ooh, and there's nothing on the list for 2 weeks from today. NBIS. SCHD, hell no. I have 5 doggy. SCHD. Did you even look at the numbers before you asked me to take a look at them? What do we have down here? Okay, how can I join? You're on YouTube. On YouTube, you should be able to go to the bio and send me a DM. Send me a message with your number. I'll give you a buzz and you and I can chat. This is not right for everyone. It's boring, it's slow, it's monotonous, it's the same stocks over and over and over and over again. All companies don't have weekly option contracts. Nope, not at all. All right, next. But thank you for that. What do we have over here? Thoughts on Hood. Thea, how are you today? Hood, Hood. Interesting. Take a look. Hood. The top, the bottom, where was it? Where is it? Look at this. Down, up, down, up. That's 76 to 70. Uh-oh. We don't want the 20th of March. That's too far out. The 76 to 286. If you like Hood. Well, let's check. Uh-oh. Boop Beeps 5 HEPQ. Another newbie. Now, how I can tell you're a newbie? Because if you've been here for a while, you know you'd never suggest JEPQ or SCHD. They're not profitable at all. But we'll take a look at them just for you. So Hood is bouncing off the 30-day bottom and going up. Well, the 76 is going for 268. Let's take a gander at that. Let's get out of there. Let's change this. And yep, I know before anyone says anything, I know Hood doesn't have dividends. So let's take a look. 76, there it is, one contract. And here's what it looks like and what it sounds like. One covered call Hood, 27 February, that's this coming Friday. The 76 call option, 446 the profit, 7,100 is the investment. So what's the rate of return? Well, let's get the calculator and divide it out. 446 profit divided by investment, 71.54 comes to a grand total of 6.2. Who came up with this one? 6.2 for Robinhood, if you like Robinhood. I'll write that one down. It's not really on my list, but 6%. All right, right, 6.2. That's a little different now, isn't it? Let's save this one. $6.2 for Robin. Who would have thought, right? Robinhood, 6.2. Wow, where is it? Come on. There it is, right there. And there she be. One covered call, Robinhood. 27 February, that's this coming Friday, 5 days away. The 76 call option, 446 the profit, 71.54 is the investment. The cost of the trade, including commissions and fees, 7,154. To make, what was that profit again? 5.1? Or was it 6 point something? 6.2. 6.2 for 1 week, if you like Robinhood. Ugh. I hate it when it does that. I do. Huh. Interesting. I never really watched that, but it is what it is. No! Where the hell did it go? Ooh, I really hate when that happens. Everything just disappeared. All right, that's still there. That's important stuff. All right, so let's try this one more time. 6.2. Sorry, guys, the other one got lost. Try it one more time. They all disappeared. There it is, Robinhood. There it is. Okay. 6.2. Those from last week. Those are from last week. All right. Sorry, I don't know where the other ones are. They disappeared. It's technology for you. All right, what else do we got? Let's start taking a look at some questions. By the way, you're awesome with all your information. Thank you. You're welcome. That's Robinhood, was founded in 2013. Isn't it only 13 years old? You're right. Someone wanted to look at it. Wasn't too long ago. Yep, got that one. If the stock drops, you can roll existing calls down to a lower strike and collect more premium, but this increases the risk of having the shares called away at a loss. Can you explain more? Absolutely, Andrew. Here's the thing. Now, what Andrew just said is absolutely correct. Let's get out of this. Go back to that. Let's go to here. Oh, wait a second. Let's leave it here. Now, let me show you this, Andrew. Are you ready? Now, when I tell people I really don't care hugely on the strike price or the stock price, let me explain why. Because if you buy a stock, okay, if I buy a stock, this one right here, Robinhood, the high is 152 and the low is 30. Did you hear what I said? The low for Robinhood is 30. 30. And it went from 30 up to 152. That's a nice return, don't you think? Because 30 to 60 is 100% return. 30 to 90 is 200% return. So 30 to 120 is a 300% return. So 30 to 150 is a 400%. So this thing jumped up 400%. and now it's coming back down again. Well, that's what stocks do. It got to this point here, 76, now she's going to turn around and go back up again. That's what it looks like it's going to do. So you got to ask yourself the question, do I like Robinhood? Do I like it at this current price? Am I willing to buy it and hold on to it until it hits my exit target? What's my exit target? Well, if I'm buying it tomorrow morning, I'm paying 76 bucks. So, remember, rule number 2, if I'm buying it at 76.11, rule 2 is never sell at a loss. So I will never sell it for less than what I paid for it. But that's just me. You got to decide what is right for you. So, yeah. Now, when I say I don't really care about the stock price, let me explain. All right? Now, if I bought it at 30, let's say I buy 1,000 shares at 30. Okay? That gives me 10 contracts. Okay? 1,000 shares at 30, that's 10 contracts. The stock jumps up to 150. I still got 10 contracts. Now, let's say I buy it at 30 and Tom buys it at 150. Who gets more in dividends? Neither one of us, because we all have the same amount of shares. So it doesn't matter how many shares you have, and it doesn't matter what you bought it at, you get the dividend, 1 dividend per share. So whether you bought it at 30 or bought it at 150, you're still getting 1 dividend. That's it. Stock price doesn't really matter. Does the company consistently make money year after year after year? Because once you own the shares, 1,000 shares is 10 contracts. Whether it's $30, it's still 10 contracts. Whether it's $150, it's still 10 contracts. And the interesting thing about 10 contracts is when we go over to the numbers. The numbers right here. What am I buying? What am I selling? Okay, 10 contracts. Whether I buy it at 30, whether I buy it at 150 is irrelevant because you got 3 opportunities here. ITM in the money, ATM at the money, and OTM out of the money. So if I buy the shares and I get 10 contracts, I can sell in the money, at the money, out of the money. Now, what does that mean? Well, at the money is where the current price is right now. So if I bought it at 150 and I'm selling the 76s, which is at the money, that's the highest rate of return at the money. In the money is higher, which is a safer trade, but I would be losing money if I bought here and I'm selling here. I don't want to do that. Now, when the stock goes down, I want to sell out of the money for at least 2 to 3 strikes out. So let's get rid of this so we can actually see. Okay, so at the money right now, we're looking at 360. 3 strikes out of the money, which would be the 78s, which would be 170. That's still more than 1%. Because remember, I bought it at 150 and I'm picking up 170. I can go 5 strikes out of the money, and that would be 135. That would be below 1%. So the thing is, when the stock drops, I drop my strike price, but I'm still bringing in something. I always want to bring in something rather than nothing. And that is going to be a balancing act. What do I mean by that? You've got to balance between risk and reward. The closer you get to where the money is, where the action is, that's at the money, right there, higher risk. In the money, oh hell yeah, that's even more risk if the stock drops on you. Okay? Anyway. That being said, what else do we got? Okay, so we got a couple of people, couple of newbies. Now, the only reason I know they're newbies because anybody who's been here for a while knows never asked me about SCHD or JEPQ because they're not profitable. Let me show you. All right. JEPQ. Well, now that's weird. Brand new computer should go a lot faster than that. JEPQ. Okay. Alrighty, called away. Curious to know why everything is backwards. Well, if you know how to take the selfie camera on an iPhone and invert it so that I can have everything looking normal, I'll be more than happy to do this. But as of this date, no one has been able to tell me how to invert the signal. Okay, so yeah, I've been doing this for a while and not once has anybody come up with a way to invert the image on a selfie camera on an iPhone. Okay, so here you go, JEPQ. Are you ready? Who came up with this one? Boop Beep 5. Boop Beeps 5. Okay, here we go. You ready? Now, let's go all the way back to the beginning, which, by the way, for JEPQ, let's see, I want to do this again just to make sure. Yep, I'm right. The very first dividend for JEPQ was June 2022. So this thing's only 4 years old. Why am I looking at a 4-year-old company when I say I want 2 decades? JEPQ does not fit. Yes, I'm aware that Dell doesn't have 20 years of dividends. I'm aware of that. Neither does JEPQ, but let's take a look at JEPQ. 37, 34, that's going backwards. 40, 54. Okay, so here we go. 37, down, up, up, down, up, down, up, down, down, up, down, 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 up, up, down, down, up, 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 down, down, up, down, down. Yeah, no thank you. Did you notice Boop Beeps 5? It's not consistently profitable. Now, consistency of profitability is higher, 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 higher. I don't care if it's a penny. I don't care if it's a half a penny. You're either making more money or you're not. And as you can see, when the dividend drops, that means the profit dropped. Because you can't give out more money if you're making less money. So the dividend and the profits go hand in hand. So if it's more profitable, the dividends get higher. If they're losing money, the dividends get lower. So you need to ask yourself the question, do I want to invest in something like that? Me, I say hell no. But you like JEPQ, you have fun with that one. Now we're going to do the same exact thing with SCHD. And for those of you who've been here before, SCHD. Open Gemini and ask it. It gave me perfect instructions. Gemini, I'm assuming that's an AI thing, and yeah, I don't use AI at the moment. Okay, so look at this. SCHD actually has dividends all the way back to 2011, which means that's 16 years of dividends. Let's see, are they increasing or are they decreasing? Let's check it out. Are you ready? The very first dividend, 4 cents. Okay, higher, 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 lower, higher, 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 lower, higher, lower, higher. We can do the same thing over and over again. SCHD, not profitable. It goes up, it goes down, it goes up, it goes down, it goes up, it goes down. Now, you like it, fine. Nothing wrong with it. It's a marketed ETF. A lot of people buy it, but it's not consistently profitable. The numbers, oh, look at that. 9. So higher, lower, lower, higher, higher, lower, higher, lower, higher, 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 lower, higher, lower. Yeah, it goes up, down, up, down, up, down, up, down. No, thank you. Now, look at it my point of view. I'm retired. So, hypothetically speaking, I get, let's say, $1,000 for the week. And next week I get $1,000, and the next week I get $1,000, and the next week I get $800, and the week after that I get $750, and the week after that I get $1,200. It doesn't work for me. When I'm retired, well, I am retired, I want consistency. I want predictability. Oh my goodness, what was that? Let's keep on going. What was the last one? The last one was Hood. All right, what do we have over here? Wow, I missed all these questions. Oh boy. Somebody wants to take a look at Mara. We looked at Hormel. Joshua, I'm a new member. I got an email, but no stock list for upcoming weeks. Where would I find this? Okay, Joshua, the list gets sent out after the show. Okay? So the email that you got was an invitation to the live show tonight, which means you could ask questions live if you wanted to. Zet, Cos and Astra in the house. Cos, what's happening? It's Cosmo Kramer. Kramer's in the house. Okay, Andrew, Hormel, we're able to take a look at it. Cos wants to take a look at Mara. And yes, I know, Mara doesn't have 20 years old, so it's just one of those ones. Here we go. The high, the low, where was it? Where is it? Down, up, down, up. Okay, 797. We're looking at the H. It's paying 41. That's over 3%, 4%? Let's take a look. Last 30 days. Right there. What do you think? Last 30 days. 30-day high, 30-day bottom. Now she's going up. 797. The 8s are going for 41. That's over 4%. Let's take a gander. Let's get rid of this. Let's change this to covered call.